Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We are never at a loss here for top stock picks, and this week is no exception. I'm joined by Ryan McQueenie, our equity strategist here at the desk, and Brian Bolin, our equity strategist on Skype. So, Ryan, we're going to start with you. Tell us why you chose Lockheed Martin, the largest defense contractor.
Well, I'm playing it a little bit of safe right now. I'm going defensive with the defense contractor. You know, I'm thinking right now. In this environment, I'm looking for blue chips, I'm looking for dividends, I'm looking for solid valuations. Okay. There's other opportunities to catch things on rebounds here and there, and that's great. I'd rather just play it a little bit more safer, given what we've just gone through over the past 3 months. We're obviously well off the lows now, but I still like a nice, stable defensive pick. And with that in mind, you're getting about a 3.3% dividend yield with Lockheed Martin right now, as we'll get into in a second. A really solid price consensus and EPS surprise history and a pretty great valuation right now, in my view. The first thing I want to point out, though, is the earnings estimate trend. We've actually seen the revisions here slip outside of our 60-day window, so you can see none here in the last 60 days, but we know that the trend has been moving higher because if we look at where the estimate, the Zacks consensus stood 90 days ago for the current fiscal year, we've been trending significantly higher. And then more importantly, as we head in further into calendar 2019 and further into fiscal 2019, the trend has been in the same direction for that fiscal year as well. Estimates on the rise. That's exactly what we like to see. But as I noted, Lockheed also has a great price consensus history and solid valuation right now. As we can see, really from 2014 to 2018, one of the best price consensus EPS surprise charts you're going to see anywhere. Really nice, even, steady slope higher on the price. Love that trend. One earnings miss here, that's it. And as we can see, plenty of beats to go around. That being said, things get a little bit rocky here in 2019 or in 2018, and that's why I like the value case, because as we can see here, we're around this just over 260 in this 270 range here. Where were we in terms of the earnings consensus the last time this stock was trading at this level? Well, this was all the way back here in early 2017. Look how much higher the earnings consensus is now than it was back then. So we're getting an much improved earnings picture at a better valuation right now than we were able to even a year and a half plus ago. And so I think really when you think about, you know, taking that defensive posturing that I explained, given the volatility we've seen over the past 3 months and just wanting to play a little bit more safe, I think the value case here really makes itself. And, you know, add in that nice dividend yield, and it makes a ton of sense right now.
All right. Yeah, it does make sense. Brian, you've been watching Netflix lately, right? I mean the stock, not the adult films.
Right. I haven't been watching any of the adult films on Netflix, but I have been watching the stock, and I've been watching the recent phenomenon that is Bird Box, and we'll get to that in just a second. Just a quick run through here on Netflix. It's NFLX is the ticker. It's a 3, Zacks ranked number 3, which is a hold. And it has a report card with the style scores that was just like mine back when I was in school. All Fs, Terry. You know, not necessarily something you want to see, but not something I want to shy away from here either. I do want to point out that earnings are coming very soon here, the 17th. As we can see it right there. So expecting good things, obviously, for earnings. But let's take a look at why this is a 3 and just a quick look at the estimate movement here. We can see that estimates have been slipping just a little bit coming in. You know, there is a big debt exposure that's going to eat some of the EPS away here. So last 2 quarters not going the right way. But for the overall year, you can see very minimal action there. Next year, the numbers coming in just a little bit here, but you know, we're going to see how the earnings play out. I think the reason that we've seen this stock like really move here has been this phenomenon called Bird Box, and maybe you've seen this picture on your social network, your social media, something, Twitter. It's the Sandra Bullock and a few other big name actors in here, and this is a movie that they released, and some 45 million subscribers saw it in the first week while it was on the service. And that's pretty gigantic. Obviously, they spent a lot of money to make this film, but you're seeing like a real huge phenomenon inside of a blockbuster that's coming to you for free. Really changes the value proposition for Netflix here. So the stock has obviously woken up a little bit after being in the doldrums. We've seen the move from as we can see here on this little chart, just this upward move right here. I expect this sort of move to continue for Netflix as it runs into the earnings report that's coming, in about a week or so.
All right. Do you own it?
I do not own Netflix, no.
What about Ryan stock? Do you own that one?
No, I do not.
Okay, Ryan, how about you?
We have Lockheed in the income investor portfolio service right now, but I do not own it personally.
All right. Well, thank you both for that. And don't forget, you can always access stock information as much as you want, really, on these two stocks and many others on our website, Zacks.com. So get on over to the homepage and start checking it out. With Ryan and Brian, I'm Terry Ruffalo.